Hello. Hi everyone, welcome. My name is Collar, co-founder of Sublime Trading. We specialize in helping high salary earners and CEOs get consistent returns in the stock market using a simple trend following strategy in just 60 minutes a week. Welcome all to the live training session. Just waiting for some people to load in. So what we're going to do, as you can tell by the title of today's session, we are going to look at a potential setup for a Christmas rally in the S&P 500. So there may have been some discussion, you may see some discussion online regarding a potential rally in the market. So let's have a deep dive in the S&P 500 and see exactly how price is behaving in this asset. So as you can see, we have the three screen setup. The top left hand chart is the monthly time frame, and the top right hand is the weekly, and the bottom chart along the bottom is the daily. So we look at all three time frames. The bigger the time frame gives us the clearer long term picture. Then we go down to the weekly, which gives us a closer look at market, and then the daily is where we actually execute our positions. So if you are a day trader, swing trader, this may not be something you're familiar with, but it's something that you may want to take on board, because looking at the longer term, bigger picture of any asset is far simpler to invest in than trying to jump in and out of positions each and every day. So I'm going to start now and look at the S&P 500. So let's look at the monthly time frame to begin with. On the monthly, we had so far this month we can see a bearish candle is in play. Let's look at the bigger picture price action. So although we've seen let me remove that. Although we've seen a decline from the start of this year, if you look at the long-term picture, if I squeeze all the way out, price has been in a long-term bull trend since March 2009. So that was following the market crash of 2007 to 2009. So price has been in a long-term rally since this point. And along the way, there have been deep declines against the trend and also areas of consolidation. And it just so happens that we've had a correction the whole of this year. This was due because, if you can see, if you actually measure how long this trend was, so the bottom of the candle for March 2009, if I measure that to the peak of this year, that was a move of just over 632%. So that's a very, very large move. The decline so far has been the deepest its price of moved was 26%. If we measure other declines in the past, this one during the COVID pandemic was a decline of 35%. So the percentage wise, it was a deeper decline back in February and March 2020. So right now, what we can see is price has formed this correction, and these two lines, the top line is last year's high. So the highest point price reached last year, which is $4,805. And this red line is the lowest point price reached last year, which is $3,658. And these were drawn in before automatically, so we had an idea where price may have been heading. So as you can see, from June this year, price made contact with this support level. We had a bounce, and then we had another decline from August this year, and another retest of this zonal area of support. So we had a push down below this line in September, but October price moved back above this line, and also going through into November. But so far we are seeing a bearish move for this month. And also note, we have the $4,000 round number just around where my crosshair is, and price is using this area as resistance. So what we can see in the bigger picture, the long-term trend is still bullish. We're not in a bear trend right now, and we're just seeing a correction, and we may be at the base. We may have seen the base of the correction, and we may go on to see a rally continue. So let's look at the weekly to get an even closer view of price action. So we have the orange line, which is the 50 simple moving average, and this has acted as a resistance. So here in August and also recently at the start of this month. And the 200 simple moving average support line has been used as support in early October, and price bounced off this level and moved to the upside. So not only do we have last year's low around this area, we also have the 200 simple moving average. So that's two major levels coinciding around the same area. So this reinforces this level as being a major level of support. And again, we may see a base. We may have seen a base formed here due to the fact that we have two strong, and we just need to see how price reacts if it does come down to test this level once again. If it does come down based on this time frame, we have the 200 simple moving average as support. Now the 200 simple moving average is a major level. If I just zoom out, we can see if I just go to the past, during the trends, price will usually come down and it usually finds comfort around the 200 simple moving average. So following this rally from 2011, we had a nice move up, and then around 2016, February 2016, price came around the 200 simple moving average, found support before we saw the next leg of the rally. And then in December 2018, price came down to the 200 simple moving average again. So we'd like to see these retests because it's usually followed by rallies going forward. And then price went on to make new all-time highs. And then during the COVID pandemic, price did come down to tag the 200 simple moving average, but also moved below it because there was a lot of volatility during this period. But after making contact with the 200, we saw another rally. So fast forward to present day, and price has made contact with the 200 again. And what can we expect going forward? Based on previous price action, we expect to see a rally going forward. But remember, anything can happen in the market. So although it has happened in the past and it may likely happen in the future, we can't guarantee that. So we always want to wait for extra confirmation so that we don't jump into positions too early. Now, we are going to go down to the daily time frame. Also note that the trend filter bars, so the weekly and daily, has red, green, and grey candles. We want to see green in a bull trend, lots of greens in a bull trend, and lots of red in the downtrend, and we usually see greys during consolidation and also deep declines. So here we can see during this decline, this correction, there's been a mixture of green, greys, and reds because there's been quite a lot of volatility to the upside and the downside during this period. And like similar to the weekly time frame, the 200 here has been acting as resistance. So we can see December, and we've seen a decline at the moment. Now, what I also want to draw on here is a trend line. By the way, if you have any questions during this session, feel free to message me. I will see your messages, so feel free to type any questions you have. And if I draw a line from this is the all-time high from 4th of January this year and projected from the high of March 29th. And these were drawn early on. So this is based on was projected forward. Price came up to this level. Remember, we would have known about this resistance level ahead of time. So price came up to this level on August 16th this year, and also the 200 simple moving average. Then we saw a decline in price. We had another attempt at this level, even after breaking above the 200 simple moving average on December the 1st, price tagged the trend line once again, and we saw a move to the downside. So this trend line is proven to be a major level of resistance. Not only do we need to see price break above the 200 simple moving average, but also this major trend line, because it's been holding price down really well since the start of this year. So if I just zoom out here. So because we have major levels of support, although we are seeing a decline, we expect price to come down to this area of support again if it does, and then bounce from this area and reattempt to break through this trend line. But a break above the trend line wouldn't be enough to confirm a trend continuation. What we want to see are green candle. So we want to see these bars turn green because that will give us an indication that we are starting to see bullish momentum in the market once again. We also want to see a move above the $4,000 round number. And following that, we want to see a break above this recent high session area here at $4,097. And just to add extra bit of reinforcement, we want to see a pattern of higher highs. So we want to see a move up, a pullback, and then a breakout above a previous high, and that should confirm a bull trend continuation. Right now, if we jump in here, we may see price continue to decline, and we may see our investments move into negative territory. So we want to ensure that we are entering positions when we have that extra bit of confirmation. Standing aside is very important because the market doesn't move in your direction 100% of the time. So make sure you are standing aside when there's nothing to do. Apply patience, because even though you have been standing aside, even though you have not made any profit, when the trends do come, you're likely to make a lot of profit in a short period of time, as long as you have a tried and tested strategy to invest in the market. So here in the S&P, we may be seeing a bull rally going into Christmas and into the new year, because price has likely found the base. Attempts at this trend line in a short period of time. If you look at the previous trend, so we had one. So from January, we had the first attempt at this area in March, then again in August, and then again in December. But we had two quick successions here. So we may see some aggressive buying going forward. Price has started to decline over the last few days. Today's candle, we have to see how the candle closes, but we can see an indecision candle. Expect some low liquidity in the market during the Christmas period and also the new year. And price may be finding support. So from this low, we can see a pattern of higher highs and higher lows. Price may have found support. If we see an indecision candle close by the end of the trading day, we may see a bounce from this level and another push to the upside, or else we'll see another move, a continuation to the downside and another attempt at the level of support. So right now, continue standing aside because we have been waiting the whole year. Shouldn't be too long to go. Either we're going to see a break above the trend line or a breakdown below support. Either way, we'll have either long opportunities or short opportunities. And the tight area here, so the tighter price comes into the squeeze, the likelihood that we're going to see a breakout. And remember, the tighter the squeeze, the bigger the move in either direction. So if we come in tight into this squeeze here, we're either going to see a strong burst out of the upside or strong burst to the downside. I'm just looking in the chat. Hi Anub. Hi Oxylan. So I'm not, hopefully I'll pronounce your usernames correctly. If you have any questions during this session, then type them now and I'll have a look at them. There may be a slight delay, so do bear with me. Okay, so now that we've had a look at the S&P, let's have a look at a couple of stocks which are outperforming the S&P 500. Remember, the S&P has so far declined this year 27%. So we want to see stocks which have been moving up during this. So you have to have a powerful scanning software which could seek out stocks which are actually outperforming the S&P 500. There usually are stocks during the whole year, but you just have to find those stocks using your scanning software. So the first one is Signet in a long-term bull trend. So if we look at January this year, so January was from here. So this is January's candle. Price has been moving to the upside. The S&P has been moving down, but this stock has been moving up. So this is what we want to look for. We want to look at stocks which are doing the exact opposite of the S&P when the S&P is moving down. But when the S&P is moving up, we want to also find stocks. It's going to be easier to find stocks moving up when the S&P is actually moving up. It's going to be a lot trickier to find bullish stocks when the S&P is moving down. But we've found this one, and you can see the S&P is moving to the upside. For December at the moment, on the weekly time frame, see nice clear green candles. Majority of the candles are green. Some grey candles along the way, which is to be expected, but the majority are green and bullish and above the 50 and 200 simple moving averages, but there have been some green candles just been grey because of the deep declines along the way down, but price is looking bullish. We can see a pattern of higher highs and higher lows. So this is definitely outperforming the S&P so far. And if we just go back to the monthly, let's just see how much price has moved to the upside so far this year. It has been a move of around 44%. So the S&P is down around 27%. This stock has moved up around 44%. And the last stock I want to look at is at Arch Capital Group. Just get that right. CGL. So another stock which is performing really well. So from the start of the year, which is from this candle here, price has moved up 39% bullish move for December, above the 50 and the 200 simple moving average. We had a test of this moving average between June and October this year, and we had a strong surge to the upside, and price hasn't looked back since. On the daily time frame, the trend filter is green, and here's where we saw that big move in October. So price gapped up in October, so closed at $51 and opened at $55 on October 28th. And it's been forming this pattern of higher highs and higher lows, and hasn't even come down to make contact with the 20. That's how strong this move has been. Normally we see price pull back to the 20 or 50 simple moving averages, but the buyers have helped price to move further to the upside, and we've seen a nice impulsive trend at the moment. We maybe do a pullback to the 20 or 50 simple moving average, so do bear that in mind. Price doesn't always move in a nice line like this forever. We're going to see a correction, but as long as price comes down and finds support at a level, so the 20 or 50 simple moving average, and starts to show signs of strength, 102 stocks which are outperforming the S&P. Remember, if the S&P does form a Christmas rally or rally going into the new year, we're going to see the number of stocks trending to the upside increase as well. Okay, I'm just going to have a look at some questions. I see some questions coming through. You said, Vicky Valdez, you asked for the names of the indicators. So if I go to the monthly, this line, we call it the PYHL, so previous year's high. And this is the PYHL also, the previous year's low. So this is the highest point of the previous year. So we're in 2022. So this is the highest point price moved up in 2021. And this is the lowest point price moved down in 2021. So when we go into 2023, these lines will adjust to the highest and lowest points for 2022. And these are our monthly PIV9 levels. So these display the major levels of support and resistance. We don't want to focus on every single peak and all the highs and all the lows. We only want to focus on the major ones. So this highlights the major levels of resistance and support for us, so we don't have to actually go in and manually draw these on ourselves. And then on the weekly, we have the moving averages. So 50 moving average, you can find this in TradingView, and this is the 200 simple moving average. Just need to change the setting. If I just double click on it, you can see we've just got the 50 and the source is closed, and that's how simple it is. We just use that. The trend filters, these are based on whether a price is in a bullish trend or sorry, a bearish trend. So we normally see majority green candles in a bull trend and majority red candles in a bear trend. So as we're seeing majority green at the moment, we can see that the trend is moving to the upside. So it gives us a nice little visual aid of where price is going and how strong the actual trend is that is in play. So we prefer to have trend filters because it's better than having multiple indicators on your chart. We just want to focus on price. So the fewer indicators we actually have, the easier it is to see price action itself. And similar to the weekly, we have the trend filters as well. We have the moving averages displayed on the chart. Hope that answers your question, Vicky Valdez. I know it's already too late to ride the wave. So we don't wait for actual candles. We wait for chart patterns. So we wait for that, for breakouts to confirm either a bull trend or a bear trend. So if I just go back to, actually, let's look at this time frame. So if we look at this chart, Arch Capital Group, we had a gap up on October 28th. Price jumped up, but this could have been a gap up, and we could have seen price come down to fill this gap, which usually happens when price gaps regardless of which market you're trading. Normally we see a gap, and then we normally see price fill this gap. Even if it does continue, it normally fills this gap, but that didn't happen here. So we had this bit of sideways movement over a few days, and then we had a break above this previous high from October 31st at $58. So that helped to confirm a continuation to the upside. And again, we had a move up, then we had a decline, price pulled back till the November 15th. Then we wanted to wait for a break and close above this high. So the high of November 11th at $59. This happened on November 30th. So this confirmed a continuation. So this is why we wait for confirmation, or breakouts for confirmation, because it helps avoid traps, like you said, and it keeps us on the side of where the actual trend is actually moving. So because we're seeing an overall bullish move, all we need to do is wait for a break and close above a previous high, and that confirms. We don't look at the shape. Well, we do look at the shape. We want to see a strong bullish candle, but we're more focused on a previous high being broken. And because we're dealing with the daily time frame, not the intraday time frame, a break and close above a previous high is a clear confirmation of a continuation of a trend. So I hope that helps answer your question. Just wait for breakouts, wait for a pattern to identify itself, and just continue to identify the pattern of higher highs and higher lows, and that should help you avoid traps of jumping into positions when it's likely to be a fake breakout. I shine. Yes, there probably is you're right. There is probably a long lag, so do check out the recording if there's a long lag and it is affecting how you are viewing this live stream. Then do check out the recording where you can just skip to the section that you require. Okay, so I can't see any more questions coming through. I'm going to end the live stream here. We have a few other previous live streams available, so go and check those out. Also, check out our ideas. We keep you all updated, so make sure you keep an eye on our channel and hit the subscribe, like our channel, like our page, and so that you can be notified whenever we have any live streams. I think you have to follow the channel. It should be below the channel right now, below the stream. So just like us, and you should be notified with any live streams that we do put on for you guys. So that's it for today. I'm going to end the live stream here as I can't see. Just going to have a quick last peek at the chat section. No questions coming through. Hopefully you enjoy that, and see you all on the next live session. Take care.